at this point in time, Shrishti, yes, benchmarks are holding on to good gains, but like I said, pharma, the only weak spot in the market, but you have a positive note that's come in, isn't it?
Well, yes, for today, Cheryl, it seemed to be a weak spot in the markets, but given the volatility in the market, we need to remember that just yesterday, the pharma counters were all buzzing on the back of their nature of being defensive. And today, a positive note coming in from Macquarie as well, where they are positive on the sector. And what are the key triggers that Macquarie is highlighting, and what are some of their top recommendations? Let's get in more details from Vamakshi joining us right now. Take it away, Vamakshi.
Well, yes, the entire pharma sector is in focus today, and in fact we have a brokerage note coming in from Macquarie. Largely they have highlighted that the drug shortages in the US market continue to rise. In fact, higher interest rate scenarios are creating multiple headwinds for some of the generic manufacturers. When they talk about competition, that has seen a slight bit of a reduction, which is a positive, and in fact this reduction has come in for the first time in the past decade. So given a confluence of all of these factors, Macquarie highlights that companies with a meaningful US generic exposure stand to benefit from the current disruptions. Their pecking order is as follows. They prefer Sun Pharma over Dr. Reddy's, Aurobindo Pharma, Cipla, as well as Lupin. So all in all, they've gone ahead and maintained their outperform rating as well as hiked their target price for counters such as Aurobindo Pharma, Lupin, Alkem Labs, as well as Cipla. They've maintained their outperform rating for Sun Pharma with a target price of 1,275, as well as for Dr. Reddy's with a target price of 6,300 rupees per share. And they've maintained an underperform rating for Zydus Life Sciences. For Ipca Labs, however, they've maintained a neutral rating. So all in all, given this report, keep an eye out on all of these pharma counters.
Thank you so much for that. Actually, Vamakshi, we are definitely watching out for all of these pharma names, but let's hear out what exactly Nikunj Dalmia, who's the managing editor of ET Now and ET Now Swadesh, had to say on the pharma space as well as on the Macquarie report.
Divide the pharma space, you can broadly divide it into two, and this is just what I've learned over the years. There is chronic and there is acute. Chronic is essentially lifestyle diseases. So for example, if you need a blood pressure medicine, if you need a diabetes medicine, that is something I just love to talk about it. I just love to talk about it. I just love to talk about it. Yeah. So I'm just correlating that. In fact, the Macquarie reports talk about it. I'm not spoken to the analyst, but it's just a coincidence. Okay. No, so there is chronic and there is acute. Acute is infection. During COVID, acute companies which had an acute portfolio, acute drug portfolio did very well because it was a disease. Then you got lifestyle, which is chronic. Now, because of COVID, acute companies which had acute portfolio, they did rather well. Chronic took a backseat. Now chronic is making a comeback. Tension, stress, whatever you may want to call it, that is coming back. So companies which have a portfolio which is tilted towards acute, they are the ones who are making a comeback. They are the ones which are related to chronic, they are the ones who are making comeback. Which are the companies which are in that space? Well, there is Eris, there is Lupin, there is Cipla, there is Sun Pharma. So that, I think there is a change in terms of the portfolio positioning which will happen. B, we must also recognize that now the pricing power is also a function of availability and need. And in the US market right now, there is a shortage of drugs. US FDA has been very stringent in order to, they've been very stringent post the COVID lockdown started. So I think they're going to go easy on that. And then third, what Anisha mentioned, pricing power. The point here, Anisha, is that there was a time when everything in the pharma space went higher. But now I see a categorization. So I will not be surprised that US-facing pharma companies will do well. Within that, companies, like I said, which have exposure to chronic diseases or companies which have a chronic disease portfolio, I think they are likely to do better.
Okay, so that's the editor take coming in on the pharma space, and given the kind of tailwinds that we are having from the US drug shortages, the companies having more exposure to the US markets are likely to benefit. But let's move on and let's connect with our experts then and try and find out that which are their top recommendations coming in. And with this, let me welcome on board Shahina Mukadam as well as Kunal Bothra on the technical side. A very good morning to both of you, and thank you so much for your time. Shahina, first coming to you, what's your take on the pharma space? Because we have seen the sector performing quite well because it is seen to be coming out after a deep underperformance, especially post-COVID. And given the kind of tailwinds that Indian markets are being a bit supportive, the US drug shortages as well as some of these key launches are gaining market share in the US market. So which are your top recommendations, and keeping quarterly earnings in view as well, what will be your take for the pharma space?
Well, after a long period of consolidation, what we saw in the last 6 to 9 months was a nice bounce back for pharma companies. Of course, this backed by their new launches in the US market. And as Nikunj rightly put, I think the US market is starting to look much, much better for Indian companies, both in terms of new product launches, which is contributing to their overall top line revenue growth, as well as if you see on their margin front, they're doing better with prices having generic prices having stabilized in the international markets. So I think the demand for pharmaceutical products has always been there, but now the support in terms of pricing and margins is coming back. Also, what we've seen is that a lot of FDA inspections for the plants have taken place in the last 1 year, and the companies which have come out well in these inspections are actually now expected to do pretty well over the next 1 to 2 years. So I would go with the Macquarie report recommendations. In fact, they are very close to my own. I should also say that I personally also have been holding from a long time some of those stocks like which continue to be my top pick even today, given the fact that the valuations are lower compared to the rest of the sector. Like for example, you have Dr. Reddy's. They have had a very strong first quarter. I believe even the rest of the year would be good, despite the fact that some of the new launch that took place and contributed to US product sales in the first quarter may sort of come down over the next couple of quarters, but you have other products that will take place. You have Aurobindo Pharma, where of course the stock has doubled in the last 1 year. But there also, I think the valuations are still attractive. They have come through nicely through the US FDA inspections of their plants. And I think, the balance sheet is pretty strong. Also, I think Cipla, which actually is going to see support from the M&A activity potential. And here also, I see Dr. Reddy to be a very strong suitor. And I think the two together would make a very strong pharma company in terms both of valuation as well as in terms of product portfolio. So I think these would be largely my picks in the sector.
All right, so those are the picks coming in from Shahina in the pharma space. But Kunal, a huge space to talk about, isn't it, pharma? Out of that huge space, which are your top bets? Because after a lot of consolidation, you saw a sharp up move. Then you had Mr. Basin also join us on the channel today and say it's a darling sector right now. Do you concur with that view? Is it a darling sector right now?
Yeah, it's more of a consistent sector, and I think that's the highlight for pharma stocks from 2020. Many of the stocks managed to make a very fresh comeback. It was a lull period for 21-22, I think broadly for the pharma pack, pharma stocks. But then I think start of 2023 or rather end of 2022, these stocks have made a steady comeback. Many of these stocks have managed to recover and recuperate the losses over the last couple of years prior to that. Now, I believe from a short to medium term play, I think the likes of Glenmark Pharma looks very attractive. Zydus Life is something which I would be keenly bullish on. So the mid cap and the pharma stocks are looking quite attractive. Granules is something which I've been tracking off late, and that stock is also looking attractive at the 350 plus mark where it's trading right now. So these are the three names which I would highlight specifically from the pharma pack.
Okay, so those are the top recommendations coming in from the fundamental as well as the technical point of view. But with this, viewers, it's time to slip into a very short break. Don't go anywhere as we come right back.